All right, today we're diving into the automotive distributor Tan Chong International. Now, if you just glance at their 2025 performance, you might see a story that looks a little worrying. But as we're about to find out, the real picture is way more complex and, honestly, a lot more interesting. And this is the number that just grabs you right away. If you only saw the headlines, this is what would jump out. A drop of nearly 50%. I mean, it looks bad, there's no question about it. So to be super clear, that 48% figure, that's the fall in the company's profit after tax from one year to the next. That's the classic bottom line number most investors zoom in on, and seeing it get sliced in half like that is an instant red flag. Exactly. But is that the whole story? I mean, when you see a number that dramatic, you've got to ask, what really happened here? Is this a sign of a deep, fundamental problem, or is there something else going on just beneath the surface? And that question brings us right to the heart of it, the Forrester bottleneck. Believe it or not, the main reason for that huge profit drop wasn't a lack of people wanting to buy their cars. It was the complete opposite. It was a lack of cars to sell to them. Okay, let's unpack this a bit. The company's sales figures took a major hit simply because they could not get enough units of the new and apparently extremely popular Subaru Forester. Demand was just through the roof, and the orders were piling up way beyond the number of cars they actually had to sell. So the key takeaway here is this. Those official sales numbers are pretty misleading. They don't reflect how many people were actually lining up to buy one. And this chart really puts the scale of that demand into perspective. I mean, look at this. In Hong Kong, unfulfilled orders were 117% of the cars they even had available. In the Philippines, 82%. And get this. In Vietnam, a staggering 469%. So yeah, this was never a demand problem. It was a supply bottleneck for a product that is very clearly a massive hit with customers. Right. And knowing all that is so important, because while that mean profit number was down, another financial metric tells a completely different and much, much more positive story. This is where we get into what I like to call the tale of two profits. So first, here's that 48% drop we started with, but shown visually. You can see profit after tax fell from over 600 million Hong Kong dollars down to just under 320 million. On its own, that looks like a company that's really struggling. But now, look at this. This is a measure called total comprehensive income, or TCI. Instead of falling, it absolutely skyrocketed by 920%. It went from about 100 million to over a billion Hong Kong dollars. So what on earth is going on here? How can these two numbers tell such radically different stories about the same company? Well, it's actually a fantastic way to look at a company's total health. Think of it like this. Standard profit is your salary from your main job. Total comprehensive income, on the other hand, is like your salary plus the change in value of your entire investment portfolio, your stocks, your house, everything. So for Tan Chong, their salary from selling cars was down because of the supply issue, but their investments, things like their stock portfolio and positive currency effects, had an absolutely exceptional year. And it wasn't just their investments that did well. While the whole Forrester story was grabbing headlines, the company was quietly making some really smart moves to strengthen its entire financial foundation. They cut their net debt by almost $500 million. Their gearing ratio, which is a key way to measure debt, got a lot better. They trimmed overheads by $175 million, and they managed their inventory way down by almost $700 million. This doesn't look like a company in trouble at all. It's a picture of really disciplined financial management. Of course, Tan Chong is a big regional player, and that means the situation wasn't exactly the same everywhere. When you look across their key Asian markets, the performance varied quite a bit, which paints a much more complex and, frankly, realistic picture. Let's just walk through this really quickly. In Singapore, you see this tale of two brands, an older Nissan lineup and a 30% sales drop, but the new Forester hybrid drove Subaru sales up by 68%. In Hong Kong and Vietnam, like we saw, it was just massive unfulfilled demand. And even in a really tough Thai market that's shifting to hybrids, Subaru sales grew 48%, and they actually grabbed more market share. So yeah, the challenges are real, but so are the successes. So what does all this mean for the future? Well, looking ahead, it seems the company is navigating that classic mix of risks coming from the outside world and real strengths that they've built up internally. On one side, you've got the headwinds, global uncertainty, trade risks, and of course, just fierce competition in the car market. But on the other side, the tailwinds look pretty powerful. That huge backlog of orders is just sitting there, waiting to be filled. They expect to get more cars to sell in 2026. They've got new EV models coming online. And, maybe most important, they're facing all of this with that much stronger balance sheet we were just talking about. So, after digging into all the numbers and the stories behind them, what's the big picture here? What's the final takeaway? I think this quote sums it up perfectly. The 2025 story is one of short-term profit pressure, but it was caused by a product with incredibly high demand. And all the while, the company was quietly strengthening its financial foundation for the future. That big headline number, it just doesn't tell you anything about the strong customer demand or their improved financial health. And that really is the crucial point for anyone looking at this company, isn't it? You have to look past that initial shocking profit drop. Absolutely. The real story seems to be about balancing a temporary, supply-driven sales dip against two really powerful things. First, fundamental customer demand for their products, and second, a deliberate strategy to build a more resilient financial base for whatever comes next. Just a quick note before we go, this content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.